Hello and welcome to ATFX, and in this video we're going to be looking at the preview to the PCE data out of the US in Friday's trading session. PCE is the favoured inflation data for the Federal Reserve Bank, and that's why it's got such an important impact on what's going to happen not only in the next few trading sessions but probably in the short term and medium term, and especially of course with regard to rate moves in the US. Now, the market, as we know, is closely following when the Fed is actually going to start making its first rate cut. At the moment, that's priced in for September, and there's about 60% chance that they're going to cut rates probably by 25 basis points in September, and that's what the market's trading on. Now, if we get a higher or a significantly lower print in that CPI, it's going to move those interest rate expectations, and that is what the market's been waiting on for most of this week, and that's why this is such a key data print later. So what we're going to look at today is we can just look at a few of the major currencies and see where the trading opportunities are. And of course, one of those main ones is dollar yen, which overnight did hit a 38-year high. There's a lot of talk of intervention from the Bank of Japan, and even though we're talking about the US data, we can't avoid FX at the moment without talking about that Bank of Japan and potential intervention. All currencies, all major currencies will move on this data, and they will move whether it's on target, slightly lower or slightly higher, or with a big differential. It is that important, and that is what the market's been waiting for all week. You've seen stock markets grinding higher, but there's been no definite trend because everyone's waiting for this big number, and the rest of the week's been relatively small in terms of data releases. So one of the major currencies that will be traded hard on this is dollar CAD. Now the loonie, as you can see, these are all longer term charts. He's sitting in the middle of that trend at the moment, around 137 the figure. Of course, what we had a few weeks ago was the Bank of Canada. They were the first G10 bank off the rank to cut rates. That obviously led to a downside move in CAD and an upside move in dollar CAD. Now, if we do get a stronger print from the PCE today, expect it to challenge these levels here, 138, and then recent highs in Q2 2024, back then in April. A breakthrough this level, 138.46, let's call it 138.50, should take us into a new range. So opportunities there. Obviously, a slightly lower PCE, and an expectation is for 0.1% increase in the month-on-month data, should take us back into that range and should bring us back to around these levels, sub 136. So that's the first currency that we thought we'd bring up. I'm going to leave the big one till last because that's the most important. Aussie, what we got from Australian data yesterday was key. We were sitting around 66.40, and Aussie has been trading range bound for the last few sessions as well. CPI data came in much better than expected, came in at 4% against expected 3.8. It popped up dead on this trend line. You see where it topped out there. There's that trend line. We didn't put this in today. It topped out exactly on that trend line. Dollar strength, US dollar strength over the rest of the course of the day brought it back into the range, and we're sitting in mid-range again. That dollar PCE number could take this Aussie out of its range. It's been a squeezing range all the way through. Support coming in now just below 66.30. Resistance around those 66.80, high 80s level. A big number either way in the PCE could see us eventually see a break in the Aussie, which has been very range bound for the last 2 or 3 months. Now, here's the big one, or I think the second big one, really, euro. So the biggest trading currency pair in the world. Euro's been kind of range bound, and you've seen these moves over, and this is obviously the course of 2024. This is the dollar appreciation, and it's been moving in tandem with those with US yields and obviously then rate cut expectations. And now, as you've seen, euro's just come over the course of the month of June. It's come down from 109. It's sitting just below the 107 level. Two factors behind that shock French snap election, geopolitical issues in France, that's really put some pressure on the euro, but also we've seen the dollar appreciate. Once again, I think a lot of traders, they're going to be looking for something above that 0.1 print for PCE. If it comes in 0.3 or above, expect this to break. This trend line looks very close. Recent low overnight, 106.64. That to break will challenge this 106 level very quickly, and I think it extends a move down to 104. Now, the last and not least the most important, let's look at dollar yen. As we know, dollar yen hit 38-year highs overnight. This is a massive, massive move. We've got the BOJ. They've been talking all week for the last couple of weeks that they've got the ammunition and they will come in and intervene. By intervene, they will push it down this way. If we get a stronger print from the PCE above that 0.2, 0.3, expect dollars to be bought, but expect the BOJ, the Ministry of Finance will make the decision, and the BOJ will come in and smash it, and they will smash it hard. Now, how long that lasts is anyone's guess, and how many times they come in is anyone's guess, but that volatility provides a fantastic trading opportunity. If it comes in on expectation, expect the market to continue to grind higher. And then there's a bit of debate, because they're probably not going to come in unless we start to see dollar yen flying and moving at a fast velocity. Of course, what the Bank of Japan is really hoping for is that we get a lower print for PCE, and that just drops this dollar yen rate back in, challenges 160 again, that brings us back into the range. This is what happened after this move in April. So don't forget, this is the last time. A few months ago, we were talking about intervention. They did come in. That's why we've seen these sharp moves on the daily chart. I'm going to bring this in for you. You can see it a little bit tight. We were all the way up here at 160.17 was the high. It got smashed out. And then what actually made this move last a lot longer was a weaker CPI print in the US. And that brought dollars into a selling pattern and brought us low. But as you can see, we've crept back up. The interest rate differential, which is still factoring now, has brought it back up higher. There's 75 ticks in the monthly hold on the long dollar yen position at the moment, and that's why everyone's diving into it. So there you go, guys. Plenty of trading opportunities. PCE is crucial. It comes out early in the US trading zone on Friday. Expect there to be moves very swiftly off the back of it. But as it is that Fed's major inflation indicator, this could set the tone for short, medium, and even long-term rate expectations, and therefore moves in the foreign exchange market. Thank you very much.